FBSC Finance brings you 30 Minutes in Finance, your weekly finance-related podcast. I'm your host, David Garbutt. Now on with the podcast. Hi, Andy, and thanks for coming on this morning. I hope you're all right.
Yeah, well, I'm great, thank you. I do appreciate the invitation. I'm really pleased to be here today.
Brilliant. I think for everybody listening, could you just give us a quick introduction about yourself and what you do and who you work for?
Yeah, so Andy Pursglove, mortgage broker intermediary working for Weystone Financial. We're actually based in Andover in Hampshire. We've got 3 mortgage brokers working for us, and then we've got 1 specialist protection advisor. But we're based from generally working from home in the Hampshire area. But we actually have clients all over the UK.
Brilliant. All right. And in terms of your actual day-to-day job, can you just give us a sort of brief overview of what
Yeah,
exactly
so
you do?
day-to-day job. Yeah, so my role is effectively to look after clients who are looking at either as first-time buyers, looking for mortgagees, people that are remortgaging or raising additional finance on their properties. So that's generally residential clients. And then we also have probably about a third of our business is buy-to-let clients, either again, remortgaging, clients that are increasing their portfolios, or looking at raising additional finance, potentially for further capital investment and development, for example.
Okay, brilliant. And is Weystone a FCA regulated firm?
Yes, we are. So we can actually be found on the FCA site. So each of us has to be have our full CMAP. For mortgagees, the protection advisor just has to be assessed for general compliance. The way that we actually work is we're part of a network. So the network is the Right Mortgage Network. So what they do is we pay them a fee. They look after all the general compliance. We tend to find that having in-house compliance, working directly with the FCA, can be quite time-consuming and costly. So the way the business has been set up is that we're actually linked with a network, and that's generally through the Legal and General Mortgage Club.
Okay, brilliant. And just going back to the CMAP question, in terms of education wise, and in order to do what you do, is that all that's required? And how did you find that? Because I know we've both got one of those.
Yeah, so well, I started off, I've been in the financial industry about 13, 14 years now. I originally started in the financial industry with one of the large retail banks, left that bank and joined Barclays as a business manager. That role entailed just generally looking after new startups and business finance for generally smaller enterprises. And then I did that for just over 3 years. And then I kind of got headhunted within Barclays to become a mortgage advisor. I didn't actually have any specific mortgage qualifications at the time, but they said that we would actually pay for the qualification, and that entailed just reading up everything to do with the regulatory side of things and taking mock tests to try to get used to it. I think it helped because I had a lot of background experience in the financial industry, that the qualification I found fairly straightforward and fairly easy. I managed to pass it all first time. I mean, going back to being as a business manager, I did get my certificate of business banking and conduct when I was actually working for the bank. And it then kind of moved on to getting my CMAP. So we had to have stage 1 or part 1 of your CMAP to start the actual formal training within Barclays, which is it's about a week's residential course and in-house training. Once I actually passed that side of things, I then took parts 2 and 3 of my CMAP, and I just found it easier to do it over 2 days because it's quite a full-on exam. So I did one on a Tuesday, one on a Wednesday, and passed my full CMAP. The next step within the bank is passing a certain number of cases, being monitored quite a bit internally and having your cases assessed. And then I was actually signed off as compliant.
Oh, nice. So, and in terms of from start to finish of that, can you give us a rough sort of estimate? Was that in kind of over a few months, all those test cases and trial
I mean, within a
cases, or?
couple of months, I went when I yeah Yeah, I passed my CMAP one within about 5 weeks. I decided to try to move things through as quickly as possible. I had the option where I could actually, I mean, Barclays said, well, you can actually do this from home if you want to. But also, I had to make sure I passed the CMAP within a certain amount of time. Otherwise, I'd have been taken off the course. So I
Well,
treated it as a
no
day-to-day
pressure.
job.
Yep.
Uh, it was a fair bit of pressure, a lot of reading material to go through. I thought everybody else that's done their CMAP would certainly find that. But within about 5 weeks, I passed my CMAP one, then took the residential courses. I would say end to end, probably about 10 weeks to get through it all. I mean, there may be other people out there have done it a little bit quicker, but there was a certain step process within the bank being highly regulated that we had to actually go through. But I'm glad I did that, and that's probably going back around about 7 or 8 years now. I did my CMAP.
All right. And do you have to do any sort of refresher training every now and then, or sort of the keeping up to date with bits and pieces? How
Yeah,
does that work?
I think most people would refer to their CPD. So effectively, that means that you've got to do 35 hours of on-the-job training each year that's recorded. That can either be reading material, general meetings that are with different lenders. You have your compliance tests that you have to take on an annual basis. So they'll generally be mortgage and fraud tests. There'll be a protection and general insurance mortgage tests as well. And also crime and money laundering tests that you have to actually apply and
Okay, brilliant. And just going
pass on a regular
way,
basis. Plus any of the cases that you do for mortgagees. Sorry.
yeah, no, I was just going way back in terms of obviously before um, you started even at the bank. What were you always into finance, or is this something that you sort of started? Um,
No, it's yes. Effectively, when I left school, my dad was a printer, and I just it's one of those sort of things. The printing industry, everybody else has been in the printing industry. It kind of follows in the family. So his father was in printing. He then my dad father became a printer, and then I was kind of introduced it as an apprentice. So just a couple of weeks before my 16th birthday, I started a printing company in Borden, Hampshire, and I was there actually for 17 years. Then the industry kind of deteriorate, or there's generally if there's a recession, people don't spend as much money on print. But I decided at the age of 34 at the time that I needed to move on because that was a good time to think, right, I need to do something else. And if I don't do it then, it's going to be a lot much more difficult for me to change industries. So I decided to go into finance. I did an HNC in business, 2-year course at South Downs College in Hampshire. Passed that with distinction. And whilst I was actually doing that course, I was actually getting some retail experience by working for a company called Bose, do home theatre, home entertainment, speaker and headphones in Gunwolf Keys in Portsmouth to
wow.
get my retail experience, presentation experience, because we had to do lots of demonstrations as well. And I left there to go straight into a retail bank on the main high street to get my initial finance experience. So that was my initial goal early on. So qualification wise, yes, I did have an HNC in business, which I think helped get my job role within Lloyd's Bank at the time, which is a retail bank, and then moved on from there.
In terms of the when you were at the Bose shop, did you find that that sort of sales experience has that sort of transferred over? And would you say in your kind of current role, is it a sales job? Would you say, or how would you
Yeah, I
describe it?
think it's enormously. What it did teach me, we had a scripted presentation. We generally had to do a theatre show, which is a full scripted presentation for around about 45 minutes. So it's quite a full-on presentation, or up to 45 minutes. But it's just general getting experience, face-to-face customer experience. I went from the printing industry where I was just working with colleagues within the print company, not seeing anybody, any clients or customers face to face, to actually, presenting yourself and effectively selling. You are selling and presenting the products themselves. I mean, I did find that it did help the products kind of sold themselves anyway, but to get to that next level, you had to be a good salesperson. And the whole time I was there, year in, year out, I was the top sales rep or sales advisor within the Bose store and got nationally recognised for that as well on a number of occasions. And I think that skill or that training helped me to then move into the finance industry. And then working for a retail bank, if most people know, from around about 2007 onwards, was very much a sales process. So you were selling constantly. And I think everybody knows how that went for some of the banks.
Yeah, definitely. And I think, yeah, and now obviously, how sort of regulated and how sort of careful do you need to be, sort of in your normal day-to-day job?
Yeah, so extremely careful. We have a set process. I mean, there are some things around that process that you can sort of amend based on whoever you're speaking to. So, some first-time buyers have got no knowledge about how a mortgage works. So, we'll go into a lot more in depth and make you know generally few assumptions. I mean, if someone's remortgaging, they probably know a bit more about mortgages. But very importantly, we have a process where we'll have the initial conversation. So effectively, a lead comes in, a client will make contact with ourselves. We need, a first time buyer. We'll want to get on the housing ladder, have the initial conversation, and then we'll follow that up with sending over things like our terms of business. There'll be a list of documents we'd require from that client, and then we'll follow up that for a more formal mortgage appointment to run through what they're actually looking to do, and making sure that they understand our terms of business. So we'll have everything is outlined. So with the way the regulations work now, we've got to be very, very clear and precise about the fees. All our calls are recorded for training monitoring purposes, not only to protect ourselves, but also protect the client, and making sure that anybody that's taking on a mortgage will, right at the very start, before they enter any contract, not only with ourselves but with the mortgage lender, they'll know exactly what the fees and costs are, and they're very, very clearly laid out. And we probably go over that a number of times depending on the understanding of the client. But if it's a joint mortgage, we're also making sure that both clients are present at the main meetings as well.
Okay, perfect. And when it comes to those clients, do you deal with any sort of particular type of client more often? And is it sort of geographically based, as in, or is it mostly local to you, or?
Yeah, I mean, because of our presence in Andover, if anybody lives in the Andover area, if they do any search for a mortgage advisor, we come up as number one on any Google searches. Quite a great, good presence now on Facebook. We've had a revamp in the last 3 or 4 months on our not only our website but also on the Facebook presence as well, and it is making a big difference. We're getting a lot more traction now. I would probably say going back about 6 months to a year ago, we were having a lot more people that were first-time buyers or moving house and purchasing. In the last 3 or 4 months, I think, as everybody knows, with the message out there about interest rates going up, we're having a lot more inquiries now in the way of remortgages. We've also had a really big surge now in people consolidating debts and borrowing. I hadn't done any consolidation mortgages or debt for 2 or 3 months, and then within the space of about 4 weeks, I've had about 8 cases. So that's a real big uptick. So whether that's a move now with the current climate, it's difficult to tell. But I think the numbers of that type of business that are coming through certainly say it all, to be honest.
When you mentioned the interest rates there, how are they sort of impacting, and how do you think they're going to impact things going forwards? And are we expecting any more rises, do you think?
I think we are. I generally follow the financial press anyway, but generally a lot of people will come to us and say, "Oh, actually, the interest rates are going to go up. I need to do my mortgage now because I hear the interest rates are going to go up in a couple of days." Generally, the lenders have already made that decision. They're already ahead of the curve. When last month, or earlier this month, when the interest rates increased by half a percentage point, which is the highest increase in obviously a number of years now. The interest rates had already been increased by pretty much all the lenders across the board. So around about a week to 2 weeks before that interest rate move occurred, the lenders had already increased their rates. I think the rates are going to keep increasing. That's the general impression I personally get. We've got to be very careful how we indicate that to clients, because it's really a case of they have to make that decision. We can't influence, a client's decision-making process on what may or may not happen with interest rates. We'll kind of let them know, where do you want to be? What would happen should interest rates rise? Generally, pretty much everybody, it's very rare that I'll do a variable rate mortgage. We're doing a number of variable rate mortgages or tracker mortgages last year. Now, pretty much everybody that I speak to wants to know exactly what they're paying for the next 2, 3, and 5 years, I'm probably doing more 5-year fixes now than I've ever done before. Generally, people want to know where they are and be able to budget for that period of time. But as you say, interest rates going forward, my belief at the moment is they're penciling in a half a percentage point increase in September. That could well push the average 5-year fixed rate to in excess of 4%, which will have a big impact, bearing in mind that the average interest rate for around about a 75% or 60% loan to value October, November last year was around 1%. So there were some 0.99 rates and 1.04s around that time. I think we're now looking at interest rates being fourfold now in the next few weeks.
Wow. Yep. That is. I need to sort mine out as well at some point. But yeah. So in terms of obviously the general economy and in particular the sort of housing stock, how do you think that's going to have an impact? Because obviously at the moment it's pretty hot. Do you think that's going to help cool it down rapidly, or any sort of views on that at all?
Yeah, I think there is that strong. Yeah, I think there's a strong possibility that the housing market is indicate a little bit of cooling now. Um, uh, I've still got clients that are having to outbid other people, but going back 6, 7, 8 months ago, I had people overpaying 10, 15, 20,000 pounds to secure a property. People were being gazumped. It was going to full and final offers with the estate agents. Estate agents were playing people off against each other. I've know of situations even for clients selling. I had one of my clients that had 35 viewings on their property, and they actually did open days over a period of the weekend, and then it was going to full and final offers the following week. My client was selling for a property for, say, I think it was around about £240,000. They got £20,000 over the asking price. The risk is that the lenders have also got to agree to that valuation, especially if you've got a small deposit. If you're putting down a 5% deposit and the lender deems the property only to be worth 240, not the 260,000 they're paying, they're going to have to find that extra money. So there is that kind of awareness that I make clients, bring that to their attention. But yeah, I think things are starting to calm down a bit more. I've got clients now possibly overpaying a few £1,000s to secure it. There are probably less people fighting over those individual properties or competing for those properties in the area that we generally work around, in the sort of Hampshire and South Coast area. But I think with the interest rate rises that have been occurring, I think that will be the tipping point. And we can't forget about the cost of living increase, energy bills going up, inflation the way it is. I think inevitably things have got to hit the buffers at some point. You can't have the housing market keep increasing when interest rates are going up that much. But we cannot forget at the moment there is a shortage of suitable housing stock out there.
Do you do any development finance?
Not so much ourselves, because of that's generally a more unregulated type of part of our sort of business. We generally will actually effectively farm that out, or we'll do a handover or an introduction to the specialist in that area. So we would typically look after the regulated business side of things, and then we've got preferred introducers or people or finance companies that we would actually hand that over to, who are able to find those that type of finance. I think if we had a lot more of that business coming through our door, then we may look at taking some of that in-house. But I think with a lot of companies, if you're not getting an awful lot of that business, you would probably do a handover to that. And the same with, on that side of thing, with things like equity release, we would tend to hand that over to a equity release specialist. So we know what to keep in-house, and then we also know what our specialisms are. We're happy to hand that over to another specialist who can actually look after our client better in that type of business. So with development finance, we'll hand that over.
Perfect. And in terms of deals, have you noticed lately with any lenders or any sort of particular types of deals that you used to be able to place quite easily, and now that you might be struggling with, or is the sort of appetite from the lenders pretty much the same?
Yeah, actually, to be honest, it is. I haven't really noticed any changes. Earlier on, well, probably a few months ago, I did start to see. I mean, generally, a lot of our clients want to borrow as much as they possibly can. Some of the lenders have amended their stress tests. I mean, that is effectively linked to the ONS, or Office of National Statistics data. So, in the background, there is going to be a general cost of living. So that will normally encompass things like energy prices, council tax, and day-to-day living costs, costs such as food expenses, and having children, for example. There were a few tweaks, but generally across the board at the moment, not a big dip. I mean, as an example, I've got a client I've submitted a mortgage case for this week. Probably about 2 months ago, they could borrow 400,000. This week, they could only borrow 390,000 with the same lender. I think that £10,000 or effectively a 2.5% drop is minimal, to be quite honest. So I don't think it really affected the lenders' appetites. I'd expected more of a decrease in their appetite, but that doesn't seem to be occurring at the moment. But as you say, interest rates have gone up quite significantly. That particular client I was dealing with 3 or 4 months ago, and we were looking at 2.25%, 2.5%. I've submitted a mortgage application this week. They weren't in a position to proceed before that, and we had an interest rate of 3.59, so in excess of 1% extra. On a near £400,000 mortgage, that's a lot of money.
Where do you see it stopping, or do you not want to give that sort of prediction at the moment?
I couldn't have predicted the rates around 3.5% a year ago. I think a lot of people were. I mean, I had people. We were doing some adverse loans at the time. Were slightly adverse, and we were looking at approaching 3%. And people at the time, because they were looking at rates of just over 1%, 1.5%, thought they were crazy. They would only fix for 2 years because they thought, a 2.74% rate, for example, was a crazy rate to be paying, is ridiculous, and thought, if they only fix for 2 years, they can probably get around 1.5% in 2 years' time. I think with current rates at the moment, they're going to be quite shocked that they're going to be paying 1% more at least than they secured for on the previous adverse rates. Those adverse rates now are closing in on the 6% mark. So these are people with maybe one CCJ, maybe the odd default. But yeah, we've got rates around that kind of level. I've got another client at the moment with a lender called Weystone. They're going to be going onto the variable rate with Weystone at 7.79, unless we can find another deal for them slightly more attractive. So there are some much higher rates out there at the moment.
Well, yeah, that is a serious increase. And moving on, sort of now looking sort of forward for you, and your business, what do you think are the sort of next steps? And are you guys? I know you said depending on the sort of business that you get, you might look to take on people. Um, is there any sort of particular area that you're focusing to expand into, or to grow?
Yes, I think a lot more of our business. I mean, I regularly talk to the director of the company here at Weystone, pretty much on a daily or bi-daily basis, and then it's really a case of. I mean, I was saying 6 months to a year ago that I think we need to, get our website up to date a bit more and expand the business in the way of remortgages, because I think if you kind of focus on most of your business being for people buying properties, either new properties or moving house. If the market slows down, that's a big part of your business that's going to actually come to the crunch point. So a lot more of our business I can see as being remortgages. I see as people raising additional finance in the market. So whereas I would say a big part of our business, even at some points, were 60-70% people moving house and first-time buyers. We're seeing that now change to, I would say, the other way around. It's more 60% remortgages and 40% people moving house and first-time buyers. So it's a big switch, and that's happened over the period of around about 3 months.
As a business, do you use a lot of bridging funding at all, or is it more sort of just regular term finance?
Regular term finance for ourselves. Again, with the bridging finance, although we have the capabilities to do that directly with some of the lenders that we have access to on a regulated basis, we can only do bridging finance on a residential side, because we can only do it as regulated. Anything unregulated, we've got again, people like the development finance, we would actually hand that off to, who have access to a greater number of lenders. With the network that we're under, although we've got pretty much the whole of the market access, there are one or two specialist lenders that we can only do raise the finance or hand over to through packages, for example. And some lenders out there will only deal directly with packages. For example, Together Finance, they will only go through particular packages.
Yeah, because we noticed it. And do you think most of the lending bar places like Together that were quite open, have they gone back to normal post-pandemic sort of levels?
As far as I'm aware, they're I would say probably yes. I mean, with the pandemic, I think it just put a pause on the market for a short while. I think there was a period, everybody knows, if they're in the mortgage side of things, that things kind of shut down for 3 months. But after that, more lenders out there are doing desktop or remote evaluations now, especially if the loan to value is pretty good. They will do a lot more of that. I think it's not only is it time saving, but also saves a lot of money. Doing a physical valuation or physically visiting a property is going to is going to be far more costly. But yeah, I would say a lot of lenders out there have got certainly, they're doing a lot more business than they were probably pre-pandemic. It's still a hot market at the moment. Whether that continues, I think that's going to be, the market will kind of dictate it itself. And I think the costs of financing and interest rates are going to be, they're going to kind of dictate the market going forward.
No, that's perfect. And I think looking at the time, Andy, I don't want to keep you much longer. But do you want to shout out anything in particular? Obviously, feel free to advertise or tell people where they can find you in order to, obviously, if they are looking for a mortgage or refinance or anything like that.
Yeah, sure. Yeah, we're predominantly, the company's actually based in Andover in Hampshire. You can actually find us at weystone.co.uk. Please, go onto our Facebook page or our actual website to look at what we can actually offer. They can contact myself directly, Andy at weystone.co.uk. But yeah, we're there. We pride ourselves on the feedback and the way we look after our clients. Testimonials from our clients, I think, probably say it all. We do charge a fee for the work that we place with our clients, but I think when people know the impact we can have and the hands-on approach that we offer our clients, especially around first-time buyers or more complex financing, I think it certainly pays for itself. I mean, the way we also work is we've got clients that don't know where to start with the way of conveyancers. We've got a panel of conveyancers that we'll use. We've got also a panel of surveyors as well. So if they have to do a specialist private RICS report, damp reports, full structural survey or a home buyers report, we can also place those with specialists as well, who can contact our clients directly. So it's a whole suite of services. So literally from initially someone maybe as a first-time buyer wanting to get it on the housing ladder and don't know where to start, we can offer the full package of services right across the board, from providing the mortgage, the conveyancing, the surveys, and then very importantly, I think people shouldn't be forgetting about the general insurance and the protection side of things. So life insurance, income protection, and critical illness cover, as well as personal injury cover. We've even got people that we can actually hand over to personal health insurance as well for medical treatment. So yeah, right across the board, we can help people. If anybody out there hears our name and interested to see what we can offer, please by all means get in touch.
Brilliant. That was one of the best plugs I've ever seen. So thank you for that, Andy. And obviously, what we'll do is this will go up live on LinkedIn, YouTube, and all the normal sort of podcast places that you can find. So do get in touch and I can introduce you to Andy if you need. But yeah, thank you very much for your time, Andy. Appreciate it. And obviously, hopefully, we'll get you back on at some point in the future.
Anytime, it's been a pleasure. Thank you for inviting us on today, David. It's been a pleasure to speak to you today, and yeah, big shout out to everyone else. And yeah, let's look forward to the rest of the year.
Yeah, perfect. Thanks, Andy.